All right, so let's talk about Nvidia. A lot of people see a stock like this pull back and immediately think, okay, this is Nvidia, this has to be a buying opportunity. But I don't think it's that simple right now. The business still looks really strong. Revenue growth is running at 73.2% year over year. Earnings growth is at 95.6%. And the margins are still extremely strong with 55.6% profit margin, 65% operating margin, and 71.1% gross margin. So this is definitely not a case where the company itself looks weak. The part that looks weaker right now is the stock itself. Nvidia is trading at 166.59 and it is sitting below the 20-day EMA at 178.55, the 50-day EMA at 181.86, and the 200-day EMA at 173.74. So price is below all the main trend levels right now, which is usually a clear sign that momentum has faded and the stock is not in a strong position. And the pullback is not small either. Nvidia is about 6.7% below the 20-day, 8.4% below the 50-day, and 4.1% below the 200-day. That tells you this is not just a tiny pause. The stock has clearly lost strength. Momentum also looks soft. RSI is at 35.8, which basically tells you the stock is in a pullback zone. That does not automatically mean it is a buy. Sometimes that just means the setup is still messy and people are trying to get in too early. And honestly, that is the big difference here. Nvidia, the company, still looks strong. Nvidia, the stock, does not look clean right now. By the way, all the data I'm using here is coming from the PreTradeIt dashboard. I've left the website link in the description, so if you want to check it out yourself, you can sign up and use it for free. Now, if you zoom out a bit, the picture gets more interesting. Over the last 6 months, Nvidia is down about 6%, which is basically in line with the broader technology sector, which is down 6.6%. But over the last 12 months, Nvidia is still up 52.8%, while the tech sector is up 26.6%. So this is still a stock that has outperformed over time, even though the shorter-term setup has cooled off a lot. That is also why this one is tricky. Because if you only look at the business, it still looks great. If you only look at the recent price action, it looks much weaker. And the dashboard is basically showing both of those things at the same time. And the broader read is pretty much the same. Nvidia is still below EMA 20, below EMA 50, and below EMA 200, and the key constraint is marked as macro defensive. That matters because it tells you this is not just about Nvidia alone. The broader market backdrop is also making life harder for names like this, and the risk side adds to that. Nvidia is flagged as high beta at 2.38, with PE stretched at 34.1 and PS stretched at 18.9. The dashboard also points to factor disagreement across technicals, fundamentals, and momentum. In plain English, that means the story is strong, but not enough pieces are lining up right now to make this look clean. Valuation matters here too. The forward PE is about 21.46, while the trailing PE is 34.12. So the market is still clearly expecting strong future earnings growth. The dashboard also shows a PEG ratio of 0.71, which helps support the growth case. But at the same time, trailing valuation and price to sales still look expensive, so this is not a stock where you can just ignore expectations. A lot still has to go right. One thing I do like is that the balance sheet and business quality still look strong. In the factor buckets, valuation is marked as fair value, quality is neutral, leverage is low, and the overall stock outlook is still marked good. So again, the dashboard is not telling you Nvidia is broken. It is telling you the business is still solid, but the setup is not as strong as the story. There is also still a bigger upside case on paper. The dashboard shows an average analyst target of 268.22 from 63 analysts versus the live price of 166.59, which is about 61% upside. So the longer-term bull case is still very much alive, but long-term upside and a good setup today are not the same thing. That is where people get trapped, and that is really the simple takeaway here. Nvidia still looks like a very strong company, but the stock itself still looks weak right now. Price is below all the major trend levels, momentum is soft, and the overall backdrop is still cautious. So for me, this is not really about asking whether Nvidia is a good business. It is more about asking whether the stock has actually earned back a cleaner setup yet. And right now, based on what the dashboard is showing, I would say not yet. Strong company, yes. The longer term story still looks intact, but as a swing or short-term setup right now, it still does not look clean. If you enjoyed this breakdown, drop a like, subscribe, and let me know which stock you want me to cover next. And if you want to explore the data behind this analysis for yourself, check out PreTradeIt using the link in the description. You can sign up and use it for free.